Hey, what's going on, folks? Welcome to this video. This video is going to be an educational piece on small account trading. So if you want to know more about small account trading, then you clicked on the right video. So in this video, we're going to talk about products that are beneficial for traders that trade with a small account from, a couple of $100s to a couple of $1,000s. That's what you would consider a small account. We're going to talk about a number of things in this video, including some newer developments to the futures industry that I think some of you might be interested in knowing about. We're also going to talk about margins and more specifically intraday margins. If you enjoy this content, remember to press the like button because it really helps with the YouTube algorithm. All right, guys, so let's get to it right here. Okay, so the title of this video is How to Trade with a Small Account. The first part of that is called How to Trade. Okay, I don't want this to be misleading in any way because this video is not going to be showing you how to trade. If you do want to learn more about various niche methods, I do have a couple other videos on my channel, but even in those I might not go into a lot of super detail. But if you want to check out some other channels that make nice videos about order flow trading and tape reading, check out eMiniOS, check out Fat Cat, and check out Christian Anthony on YouTube. Okay, so small account trading. This is the ultimate thing. No matter what product you're trading, this is the one thing that I think you should be concerned with, and it's this. It's that how many dollars can you make on a trade relative to how many dollars are you putting at risk on a trade? In simpler terms, how many dollars made for every dollar risked? That's how I analyze my results. So when someone tells me I made 3,000, I ask them how much was put at risk to make the 3,000, right? So there's certain products out there that offer what we call leverage, meaning that with a smaller amount of money, you can control a larger amount of buying power. Now, logically, when you're trading on leverage, your reward potential is higher, but your risk potential is also just as high. So that's basically what you got to understand here. There's two main asset classes that traders focus on when it comes to leverage trading. Number one is futures. Number two would be options. We'll talk about these two, and I'll just briefly mention stocks as well. The thing about stocks is that generally speaking, you will not be able to control the same amount of buying power with stocks as you would with futures. In regards to leverage and capital efficiency, meaning how many dollars you're actually tying up in a trade, futures and options are very much more efficient than stock trading. So if you ever wanted to know why so many people are talking about options trading and futures trading, it's because of those main things, is that you need a lot less cash to get started, and these markets offer greater leverage potential. The main difference between these two asset classes is that options are more complicated. There are a lot more things that can move the price of an options contract versus the price of a futures contract, because a future is supposed to represent the value of an underlying contract or of a group of underlying assets, like an index. An option is a premium that its value is derived from the value of that underlying asset. And there are other things that go into how this premium is calculated, like what is the expected or implied volatility of that option and how much time left to expiry of that option, and if the option has intrinsic value or not. Whereas with a futures contract, the reason why futures are simpler here, their values don't change based on things like implied volatility. So it's representing to you the value of that underlying contract or underlying group of assets, like an index. So now that you understand that, let's focus more on futures. We're going to talk about the cash required to trade these products. Now, you really need to know that trading is risk activity and that you should only use risk capital for trading. And I don't really need to tell you this because I'm not a broker, but because I care about you guys watching this, and I know there's a lot of people getting into trading and futures trading, you guys need to know this. So please do your own research. Don't just take advice from one guy on YouTube, please. Okay, so I'll just kind of give you a brief rundown of how these products sort of work. So when you buy or sell a futures contract, you can sell it without owning it. That's called going short. When you buy or sell one of these contracts, you don't actually receive anything into your account. You simply receive the contract that says, I own this at this price to be settled on this date. Or if you shorted it, it's I sold this at this price to be settled on this date. That's how a futures contract works. It's really simple. You don't receive anything into your account other than that contract which says I bought it at this price to be settled on this date. And what you need in your account to put on that position is what they call the initial margin requirement, which is the cash required to cover a position. And normally that initial margin is calculated based on a percentage of the notional value of the entire contract. So the notional value of the entire contract might be $20,000-$30,000, but you only need to put up, say, 500 or 1,000. And that's how futures trading works. That's why futures provide greater leverage, because the amount of capital required in your account to open a position is much, much lower than the notional value of the entire contract. With options trading, it's kind of similar, except there are many other problems with options trading. Like I told you, there's at least 6 things I can think of off the top of my head that are problematic when it comes to options trading, which is why I would not recommend options trading to beginners. I would recommend that you educate yourself to the options Greeks and learn about how these premiums are affected before engaging in any kinds of options trading, or else you're going to learn the hard way. Take it from someone who knows. Okay guys, we're going to talk about margins right now. What are margins? Margin is the amount of cash required in your account to open a position and to hold that position. Sometimes the margins can change if you're holding a position overnight versus holding it intraday. So you can see here that there's multiple columns. Intraday initial margin, which is the amount you need to open a trade. Overnight initial, which is the amount you need to hold the trade into the closing bell. And you'll notice that these are not always the same, okay? I'm gonna go over to another brokerage just to show you an example of a broker that offers what they call intraday margins, aka a lot more leverage and a lot less cash required to trade these products, which could be both good and bad depending on your experience level and the products you're trading in. For example, E-mini S&P 500, ES, that's the most liquidly traded equities futures contract in the world. And you can see that if you wanted to hold this contract past 5 p.m. Eastern, which is the time that the Chicago Mercantile closes, then you need 11,000 in your account. Whereas if you plan to open and close a position within the same session, they only require you to have $400 in your account. So that's an example of an intraday margin. That's very high leverage for this contract, which is the tick value of 1250 a tick on the S&P futures. We'll go back over to Interactive real quick, and we're gonna go find the ES. Intraday initial is 9,326.90 cents. So you can see how Interactive Brokers does not offer intraday margins. If you wanted to trade S&P futures with your broker as Interactive Brokers, that's how much you would be required to open a position, long or short, of one contract. Now to hold that position into the close at 5 p.m., you would need 13,324. You can see that that's $2,000 higher than AMP's maintenance margins for the S&P futures. One thing to note is that brokers have different margins for these products because they have different risk models. So when it comes to doing your research for these products, you definitely want to contact your broker and look at your broker's website to see what margins they have and if they have intraday margins or not. So me personally, I trade the micros, which are 10 times smaller than the E-minis. I've traded this contract for over a year straight right now, which is the micro NASDAQ 100 contracts. And you can see the day trade margins with AMP futures are $100. So right now I'm gonna outline all of the options you have when it comes to trading a small account in a futures market. So like I just finished saying, intraday margins. Now, so here are the products that I think are the best products out there for trading, or products that I find interesting. Hey, if you're enjoying this content, don't forget to hit the like button and subscribe for more content like this. So we're gonna start off here and go ahead and look at the Small Exchange. So the Small Exchange is a relatively new exchange coming out of Chicago, and they released some futures products which in my opinion are quite innovative. The products they released that I think are the most interesting, the first one is the small US dollar future. So there's only one other US dollar futures contract, and if I look at AMP real quick, it's this future right here, the DX, which trades on ICE futures, and this is a relatively large size contract. Prior to the Small Exchange releasing this contract, there was no US dollar futures contract that could be considered a micro contract or a small size contract. If you want to increase your exposure to the US dollar, long or short, I would definitely consider checking out this product. Just note the Small Exchange is still relatively new. Your broker might not be offering the product. So what you want to do is go onto the Small Exchange website, then go over to brokers. So on the left side of this page, you can see all of the brokers that they're associated with. The other few products that I find are the most interesting, the first one being the small precious metals. Again, there are a lot of benefits to having a small size futures contract because it allows you to diversify more strategically and potentially use some of these contracts as hedging and ways to balance out out your portfolio. So the small precious metals contract would be one way to gain exposure into the metals market. Let's keep going here. In talking about commodities, they just released a small US crude oil contract. Prior to this, you can trade CL, which is $10 a tick. So if I was to say to you, which products do I think you should check out from the small exchange? The first one is the small US dollar. The second one would be small precious metals. And the third one would be small US crude oil. And the last one would be the small 10-year US Treasury yield. So just for fun now, Interactive Brokers, I'm on their margins page. Small US dollar, the initial margin is $809 for this contract. Meaning that to open a trade long or short of one contract, you need this amount in your account. Now, once you open that position, you need to maintain this amount in your account, or else the trade will get liquidated. That's how that works. Here's where it comes for you guys to do your homework. If you do plan to look at some of these products, I would consider looking at multiple brokerages to see what margins each of those brokers are offering, and if they offer the intraday margins if you do that type of trading. Now, that being said, if you plan to hold these trades overnight, then the intraday margins will not make a difference. You're going to have to respect the margins set by the exchange, basically the overnight margins. Okay, so just a quick rundown of the products I think are the best for small account traders. So let's start with equities. So we have the equity micros, first of all, which trade on the CME. Micro Qs, we have the micro S&Ps, we have the micro Russells. These are the three equity micros to trade in a small account. Now, if you trade in the Europe markets, you got these ones, micro DAX and micro Euro stocks. With AMP, you can see those day trade margins. They're $100, $50. If you wanted to trade currencies, you got your currency futures, and you also have your micro currency futures on the CME. But don't forget, the only micro dollar future is the one on the small exchange. When it comes to energy markets, you can see that the margins, even the day trade margins, are very high for AMP. Prior to a few weeks ago, which was the launch of the small US crude oil on the small exchange, we only had this contract, which would be the quarter crude contract, QM, which is a quarter of the size of the CL, which is the regular crude oil contract. Regular crude oil contract, not recommended to trade that with a small account. Look at the day trade margin, $1,300 for a one contract. From a risk standpoint, you should not really be trading that contract. You want to have an account of minimum 5,000 to 10,000 to trade this contract. All right, when it comes to metals here, we have micro gold and micro silver here on the CME. You can see micro silver, quite a high day trade margin, whereas gold, $225 for the day trade margin on AMP. Now the bonds, because there's so many different bonds and so many different contracts, you're going to see that some of them might be better than others. So for example here, US 10-year treasuries, $381 for a day trade margin. This is still considered a relatively large contract. If you wanted to gain exposure to the bonds and the bond yields with a smaller size contract, I do suggest checking out the smalls for those, specifically the 10-year treasury. I noticed that that one was trading the most volume. That's pretty much going to cut it for this video, guys. I hope this helped you in some way or another. And please, if you have any questions, feel free to leave them in the comments below. I'll try and answer it. And that's it. So I'll see you in the next one. Take care, guys. Bye.